Good afternoon, ladies and gentlemen. On behalf of Berger Paints, may I extend a warm welcome to all of you to our Q4 FY18 earnings call. As usual, I'll commence with a short summary of the performance for the quarter, and after which you could ask questions, and we'll try our best to address these. We'll start with the growth rates for the quarter and the full year. Standalone numbers first. Total income from operations in the quarter grew by 14.4%. However, if it's normalized for the excise duty, as you all know, I think for part of the year we had excise applicable, and this is as per the note 2 of the published results. The growth rate stands at 14.1 for the quarter. For the year, it is 11.3, and PBT before exceptional item is 16.7. We've said before exceptional item because, as you know, there were some unusual items last year, both in the quarter and full year. This has been explained, I think, at some length in our presentation as well as in our press release. So, but I would still just reiterate that in the quarter, the normalized number would therefore exclude the effect of the impairment loss which we had taken in Q4 of FY17, and for the year we would also have to take the effect of the sale of 3- and 4-wheeler business that happened in the second quarter of FY17. So if we exclude these two factors, the PBT growth now stands at 16.7 for the quarter and 9.5 for the year. For the consolidated numbers, we would look at, again, the total income from operation normalized for the excise duty effect, again, as per the note 2 in the published results. Therefore, the growth for the quarter stands at 16.4 and for the full year at 13%. PBT before exceptional item, the growth rate is 11% for the quarter and for the full year is 7%. PAT is 0.7% for the quarter and minus 2.7% full year. The recurring theme, I think, for this year and for the quarter has, of course, been the raw material prices increases and its impact on gross margins. Many new products, however, were also introduced during the year, and that's a bit of upside for us. WeatherCoat Long Life, which is the elastomeric and weatherproof exterior emulsion. WeatherCoat Anti-Dust, as the name suggests, this is the exterior emulsion which is repels dust to a large extent. Silk Glamour, the interior luxury emulsion, and Commando, which is lower end entry level emulsion. The main items in raw materials suffering price increases, of course, have been rutile and some monomers. Some other raw materials too of crude petroleum origin have also had price increases. Consequently, the industry took 2 price increases, and of course we did the same, taken in March, around 1.5% of our architectural or decorative business, and in May in 2018, which is roughly about 2.1%. Of course, the impact of the May price increase will not be in these numbers. Demand has picked up to some extent in both decorative and industrial segments post the implementation of GST. So I think things are looking up a little bit. Q4 was certainly better. some benefit of multi-locational manufacture for us. We have new plants at Nalbari, Assam, Naltoli, Assam, and Jejuri kicked in the form of both inward and outward freight benefits. So that was a positive. Of course, the effect of the GST incentives or benefits will only kick in once the impact of all the capital expenditure, the GST on capital expenditure gets exhausted, so that will take a little bit of time. But definitely in FY19 we'll see some reasonable impact of these incentives in our numbers. Finance costs were up a little bit on account of deployment of funds for acquisition of Sabu coatings and a temporary increase in inventory post GST and a marginal increase in weighted average cost of borrowing. Some of you might recall that we used to hedge buyer's credit in terms of imported raw materials. Post all the difficulties that this country has had, particularly in the banking sector, and post-appreciation of the risks and volatility, hedging of buyer's credit becomes a very expensive option. I've resorted to this certainly in the second half. Tax rates, both for the quarter and full year, were higher, mainly on account of the one-time benefit of project-related capital expenditure and effect of lower tax rates on sale of business, which applied to our numbers last year. So this year we don't have the benefit of that. So that's why the tax rates are higher in both the quarter and the year. In terms of consolidated numbers, the growth rates, EGN, Nepal, and Bolix, Poland, healthy. The numbers were also, of course, showed up with the addition of Sabu coating, the acquisition which happened in June of last year. Startup costs in DNPA, which is our JV for automotive business, for expansion of business and currency fluctuation is bought against the yen, and there was volatility and an appreciation of the yen versus INR. Pull the overall consolidated growth rates down, therefore. That concludes the summary of performance for the quarter. I now invite participants to ask questions. Thanks.
Sure, thank you very much. We will now begin the question and answer session. Participants who wish to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Avnish Roy from Edelweiss Securities. Please go ahead.
Sir, congrats and thanks for the opportunity. So in Q4, I am seeing your growth accelerate even for the market leader. What is the reason for that? Do you see demand actually helping, or because the trade was expecting that prices will move up, so the inventory levels would have gone up? What's the sense you are getting?
I think I can't talk about competition, Avnish, but in our case, I think fueled by new products, I think that's been our philosophy always. So construction chemicals, weather coat anti-dust, Silk Glamour, Commando, all the rest of it, I think that has certainly helped. And expansion of the network, business as usual. So very, very strong network expansion numbers for the quarter. I'm afraid I can't share these, but certainly very, very strong for us.
In the presentation, you said the Nippon Paints JV was impacted by forex and initial startup costs. So can you quantify the startup cost? And in terms of forex, are you importing the paint?
I think basically the JV got a little bit caught out by the fact that, the JV is a little funded by exposure to Japanese raw material suppliers because, as you know, the interest rates in Japan are very low, so they are happy to extend credit. Unfortunately, in the quarter, the yen appreciated and the foreign exchange exposure was not fully hedged. So this is a temporary blip. I think the rectification is already being done. More importantly, I think the effect of one-time or initial startup costs for the new automotive business that they're doing is the main reason. As scale improves, as business value and volumes increase, this will sort itself out.
The forex you said has been dissolved because you started hedging or because sourcing is now from India?
A bit of both. I think also the idea is to pay back and not keep such high exposure in yen.
The next question is your protective and powder coatings have done well. So there again, it is the new launches which has driven or any other trend?
I think generally the market has improved. I think that's the sense. As you know, protective coatings was pretty much at a very, very sluggish rate of growth for the past couple of years. I think we are beginning to see the end of that. New projects are coming up. Larger projects are getting sanctioned. And I think that's what's benefiting us. In terms of powder, I think I see a relation to a recovery post GST. So the customers are able to perhaps see better demand and therefore actually buy more paint.
Okay, sir. That's all from me. Thank you.
Thanks, Abneesh.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. Next question is from Avi Mehta from IIFL. Please go ahead.
Hi, sir. Avi here. So just wanted to understand this decline in other expenses that we saw in the fourth quarter. What has driven that decline? And, kind of would FY18 number be a reasonable number to kind of consider going forward?
I'll talk about some of the most significant effects. I think I did mention in my opening remarks that we did get the benefit of a little freight relief because of multi-locational manufacture. Our newer plants are now making more paint than they were last year, so compared to the same quarter, of course. So that's one reason. Of course, there's a scale effect of some of the other expenses. And in terms of comparison with last year, we definitely did get the benefit of some advertising and promotion expenses in terms of scale. So not in terms of absolute numbers, but in terms of scale compared to the volumes. So these are probably the two major reasons.
This is for fourth quarter, sir, or for the year that you were talking about?
I'm mentioning fourth quarter and applies, of course, proportionately to the year as well.
So if I look at the full year, sir, while I understand there might be timing from a quarterly perspective, which is why fourth quarter number may not be accurate, but would it be fair to say that, because most of these factors, the first two are actually more structural in nature rather than, so it's fair to say that what we saw in the year, would that be a realistic number to kind of assume as we go forward?
I can't sort of predict, and we stay away from numbers in the future, but it's probably a good way to interpret our numbers. I'm afraid I can't confirm or help you in terms of the future numbers.
No. Okay, let me replace this. There's no one-off in that other expense kind of decline that we see is what I wanted to understand in FY18.
Apart from a slightly higher impact of freight, naturally, freight would have also improved in the earlier quarters, but more so in the last quarter.
Oh, so there is a higher impact of freight in FY18. Otherwise, everything else, from an ad spend point of view, everything was as normal. There is one over there which you can. Okay. The second question, sir, was that on the gross margin. Now, you did highlight that crude was something that is you have kind of raised concerns about crude and currency.
And rutile, which is the grade of titanium dioxide that we use.
Yeah, and rutile. But sir, you have also highlighted after that you've taken a price increase in May, which is not present in the fourth quarter numbers. So when you kind of highlight these risks, do you mean before the price hike, given the 4Q numbers, or do you mean even after the price hike increases that there is a pressure that you see on gross margins?
I think the risk is there. They have not, the risk is obviously not realized as yet, otherwise it wouldn't be called a risk. But the tendency of the raw materials prices fluctuating has increased in the last year. There have been ups and downs. Crude is definitely the main worry. So that's why the mention of risk.
Okay.
But on the other hand, of course, as you all know, the industry has the ability to pass on reasonable price increases and fair price increases. Sometimes it's difficult to recover the margin entirely because you'll appreciate for every 10 rupee increase in raw materials, one has to increase the selling price by 17 to 18 rupees to maintain the same ratio. So that's a bit of a tough one. But I think this was long overdue. The price increases were overdue. And I think we are getting back on track.
So, sir, when I see the crude price or the May price hike, after the May price hike, margins would have logically kind of benefited from that. I'm just trying to understand your expectation on gross margin, or what is the gross margin that you're comfortable with? Where you
we stay away from these, statements. I think as a matter of policy, it is a concern, and as you know, the price hikes always lag behind the raw material price hikes by a fair bit. So that's a little bit of a caveat. But again, I would repeat that this industry has the ability to recoup and recover cost increases. So hopefully that's not such a main worry.
And sir, versus the fourth quarter average, where would rutile prices and monomer prices, another two of the key inputs that how much would they be higher? Would you be able to share any number?
I can only limit my comments to the fourth quarter. This is beyond the scope of this call. I'll be able to tell you more about it in Q1 FY19.
Okay, sir. No, I meant current prices, but fair enough, sir. That's okay. And lastly, sir, you are kind of more, focusing on the automotive segment and on JV. As the automotive Nippon kind of JV kind of starts to kind of gain scale, do you expect the share of decorative in our business to change materially, or that's more another growth driver which decorative will continue to be a leading growth engine?
Both will, get the adequate focus, I think, Avi. So one, I think, sensible thing that we've done is to put the technology-dependent part of the business into the JV, meaning the passenger car business and some three-wheeler business. So I think as that grows, it does not militate or conflict with any of our focus and attention on decoratives. So the two are in two different entities and running pretty much independently. There's no resource or, let's say, a constraint imposed on decorative because of automotive.
Perfect. This is very helpful. I'll come back in the queue for the other questions. Thank you.
Thanks, Avi.
Thank you. Before we take the next question, a reminder once again to our participants that you can press star and 1 to join the question queue. The next question is from Mehul Desai from IDFC Securities. Please go ahead.
Yeah, hi, sir. This is Harit here from IDFC.
Hi, Harit.
Hi, sir. Just had a few questions. Firstly, on the on the margins front. So you highlighted that the industry has a power for in terms of pricing, but just wanted to understand how have the price flow throughs been on the industrial side in the standalone business. So how have you seen that? Are the negotiations still on there? Or we have seen some benefit of price increases coming through now. Just wanted your comments on that.
Absolutely. I think I can't be very specific and therefore have to restrict my remarks to a more general kind of comment. Definitely the lag is a little more in industrial, as you can imagine, because these negotiations have to be one-on-one with customers, and of course competitors also, their prices do make a significant impact on the negotiation process. So yes, we are in the process of taking price increases. Many of these increases have already happened. So hopefully with raw material prices being where they are and not increasing further, I think it is reasonable to expect that our margins in industrial business would improve.
Excellent, sir. Excellent. The second question was on the share of the JV profit. So this negative number that we see there, is it completely on account of the Nippon part?
Mainly, I think that's the big one. Again, one time I would hope, for the reasons mentioned.
Okay.
So that's the main one.
So lastly, it's also year-end call. Just wanted to get your sense on how the international businesses have kind of done for the full year. Just a comment on that.
I'll take the operations one by one. Nepal, as usual, is as robust as ever. Good growth rates, good profitability growth rates. So really the mainstay of our international business. In the Polish business, that's the external insulation business, we very recently invested in a new business in the UK, encouraged by the popularity and recognition of our products. We were exporting from Poland. We still are, in fact, but we now actually have a full-fledged entity in the UK called Solsam External Insulations, which is a subsidiary of our Polish company. And we've invested in a setup there with people. And this has initial costs, of course, but we expect great things from this unit in FY19. So these are the two largest bits of our international business. Very encouraging all around, I think. The Russian business, we've recently taken steps to kind of rectify some of the market-related, let's say, issues, and hopefully in FY19 you'll see a distinctly improved performance in BPOL Russia.
Excellent. The last question, if I may, was on the India decorative business. Now, I think last couple of quarters you mentioned that there has been a bit of an improvement on the demand side. Is this you think to do with the fact that you also had a fairly favorable base, or do you really see underlying demand pick up? Because that's something that we've seen fairly good growth across the other two large paint players as well. So just wanted this comment.
I think so. I think the pessimism is gradually going away. It may take, I feel, a couple of quarters for this to be fully confirmed. We generally tend to be a little more cautious going forward. But I think we are seeing an improvement. That's my view.
Okay, that's it from me, sir. Thanks and all the best.
Thanks, Hari.
Thank you. Next question is from Prathamesh Patkar from Ambit Capital. Please go ahead.
Yes. Hi, sir.
Hello.
Yes. I just want to know what is your outlook for the demand for the fiscal year 19 or for the next 2 quarters?
As you know, we don't give out any kind of numbers. But having said that, I'll say that we are cautiously optimistic. We are seeing good signs in both decorative and industrial segments. Certainly an improvement in our protective coatings business in terms of volumes, in our automotive business in terms of volume. So, along with decorative, I think reason for cautious optimism.
All right. And do you have any further Capex plans for the next 1 or 2 years?
Yes, but more in the nature of maintenance Capex. Basically, a little more work required in our Jejuri plant in Maharashtra, which we now are going to equip as a full-fledged industrial plant. Originally, it was conceived as a powder coatings plant, but now we are making liquids as well. And location-wise, it's probably the best place since many of our customers are there. Maintenance Capex for tinting machines, which, as you know, are a large chunk of our total Capex. We have plans of investing in automated warehousing systems, which is we are beginning to feel or already understood is a critical part of efficient paint handling. As scale improves, as we become larger, it becomes more and more important for us to invest in these logistics tools. So these are some of the things, but not sort of project-related large Capex in this year, FY19. We'll probably begin spending for our new Lucknow plant in the second half of FY19, but it will be in a phased manner. It will not impact FY19 numbers by a great deal, I don't think.
Okay. All right. That's it from my side. Thank you.
Thanks.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. Next, we have a follow-up question from the line of Avi Mehta from IIFL. Please go ahead.
Hi, sir. Sir, just 2 questions on the balance sheet. One, the creditors have seen a sharp increase. If you could help explain what has driven that?
I think partly on account of some of the improved terms that we have with creditors, and partly on account of capital creditors, which also because there are some couple of projects which are just being finished, like our Jejuri plant. So a combination of bit of both.
Okay. And sir, secondly, I mean, I see in the balance sheet that there has been some increase in the statutory liabilities. Is this large or assets? Is this GST linked by any chance, or what is the reason for that, sir?
This is GST linked, but has been largely unwound subsequently, so no worries there.
Oh, okay. So it was just a delay in receiving the credits. Would that be a fair understanding?
That's right.
Okay, sir. Okay, thank you. That's all from my side.
Thank you. Anyone else who wishes to ask questions at this time, please press star and 1 on your touchtone telephone. Participants who wish to ask questions may press star and 1. The next question is from Rahil Jasani from ICICI Securities.
Yeah, sir. Just wanted to ask what would be our current capacity, and you said you'll be starting to spend on the Lucknow plant, and H2 FY19. So when would you expect that to start?
Current capacity, which is like in our control and dedicated to Berger, would be about in excess of 600,000 metric tons per year, so marginally above that. Once the plants in Assam and AP are almost fully utilized, the impact of introducing new capacity in Lucknow will be felt. We anticipate that it will take a year and a half before Lucknow comes on stream. But work will start during FY19, and as I mentioned in the last set of questions, that second half of FY19 will see some expenditure. As you know, the more valuable part of the project expenditure for modern paint plants is usually the automation and the material handling, both in terms of warehousing as well as manufacture. So, in addition to civil constructions, this is a large component, but which tends to typically get added as the project nears completion. So we don't see that hefty expenditure happening in FY19.
Right.
But certainly civil work will start towards the end of the year, third quarter possibly.
Okay. And what will be the addition in the Lucknow plant?
Sorry?
What will be the addition in the Lucknow plant?
Again, phase-wise, we haven't yet sort of made up our minds, but it will be like our Hindupur plant, a phase addition. The incentive schemes in UP do allow for a phase-wise addition, so that will help us.
Okay, got it.
It will sort of prevent any kind of big bump expenditure happening in any 1 year.
Got it. Okay. And so you just mentioned positively that our network has been increasing this quarter, our network improved. So what growth rate are you seeing in our network expansion? I'm sure you can't give the exact numbers, but...
Yes, I can help you out by saying that it's higher than our sales growth, in fact significantly higher, so that's a good sign, I think.
Okay, that's good. Okay, thank you.
Right.
Thank you. Next question is from Ratnesh Vadkar from Ambit Capital. Please go ahead.
Yes, hi sir again. I just want to know, on your consolidated balance sheet, the goodwill has increased by a significant amount. Could you just explain to me, is it because of the acquisition of Sabu Coatings or...
Yeah, it is. You answered your own question. It is, yes.
All right, okay, no problem. Thank you.
Thanks.
Thank you. Next question is from Kunal Shah from IIFL. Please go ahead.
Hello. Thank you for taking my question. I have just one query. So if you look at your subsidiary margins, they have improved in this quarter versus last year. Any specific subsidiary or reason for this increase? I'm calculating it by subtracting standalone from consolidated.
Yes. So one is, of course, the acquisition of Sabu, so that has had an impact, a positive impact. And of course, as I mentioned, the Nepal and Poland subsidiaries have done better. So a combination of all three.
Okay. Yeah. Thank you. That's all.
Thank you. Next question is from Ganesh from iThought Wealth. Please go ahead.
Yeah, hi sir. This is Ganesh from iThought Wealth. And I have a question in relation to the Capex guidance that you had given for the Lucknow plant. And I just want to know what would the approximate amount be and how would the same be funded through internal accruals or debt? Will be going for debt for that?
No, we will fund it out of internal. We are a cash surplus company, as you'd see from our balance sheet. We are net cash positive. So we do have our own funds. The idea is the best use of our funds is, of course, either inorganic or organic growth in terms of. So this is why we kind of kept these funds. So no, we will not need to probably borrow. I don't think.
Okay. Okay, sir. So, and what would be the guidance actually? I mean, how much would you actually get out of your internal accruals towards Capex?
For FY19?
For FY19, yeah, for the second half that you had mentioned for the Lucknow plant.
That's right. With a little bit of the Lucknow plant expenditure coming into FY19, we're probably looking at a number close to 200, but it could be a little less than that.
Okay. That's it, sir. Thank you.
Thank you.
Thank you. Anyone else who wishes to ask questions at this time, may press star and 1 on your touchtone telephone. Participants who wish to ask questions may press star and 1 on your touchtone telephone. Our next question is from the line of Ashit Desai from MK Global. Please go ahead.
Mr. Rajput,
Yeah,
taking my question. You commented something on GST benefits which will kick in FY19. So just wanted some clarity on that.
I'll tell you what we've, I think, already, and this is in the public domain. We are entitled to part of the GST, state GST or SGST, as part of the state benefits, which was the equivalent of the earlier VAT benefit. We are also entitled to some excise benefit because there was an excise benefit in this state. So the combination of that is reasonable. The excise, of course, is no longer there, but the excise component of GST is what we are looking at. Of course, these things have yet to be finally negotiated and completed with the state government. Because we are a large project and that requires a sort of, or merits a tailor-made kind of approach. So we are in the process of getting all this sorted. As I said, there is no cash impact currently because we are exhausting the credits already received in our purchase of capital expenditure. It was a large project, so imagine that the GST element of that is fairly significant. So we do expect, therefore, that from FY19, these benefits will accrue.
So this is a one-time benefit. There's no recurring benefit.
These are benefits allotted for a number of years, subject to the cap of the overall project size. So that's how it works.
And I mean, what is the amount of this benefit, if you can give us that?
We can't be very specific as we have not made these known in the public domain, but these are available. You can look at the website. Of course, as I mentioned, these are negotiable, so a weighted capping is allowed. So that's why we are not able to confirm or tell you exactly what the benefit will be till the negotiations and discussions with government are completed, but should be fairly substantial in nature in any case.
Okay. And secondly, sir, I think industry over last 2 quarters have seen some recovery in volumes. Especially last year, post-demonetization, the volumes have moved up from mid-single digits to double digits now. Do you see pricing power improving with
I mean, competition also being low and volumes getting back to double digits? Historically, when
I think it's a resultant more than a deciding factor. I think generally the demand is improved, the effect of GST is sort of waning, and things are coming back to normal as expected. So I think that's more to do with everything else. And the prospect of a reasonably good monsoon, hopefully this year as well. We've had two reasonably good monsoons in succession. So all of this will kick in, we hope. In the long term, I think the India story remains intact, I would think.
Okay. That's it from my side.
Thank you.
Thank you. Anyone else who'd like to ask questions at this time, please press star and 1. Anyone else who wishes to ask questions may press star and 1 on your touchtone telephone. As there are no further questions, I'd like to hand the conference back to Mr. Dasgupta for closing comments.
Thank you. It was wonderful to be able to talk to all of you. Thank you for the participation as always and for the interest in our company. I do hope that FY19 will be a good year for all of us in the paint industry and that we do not disappoint any of you in terms of our performance. Thank you for participating and thanks to MK as well for organizing this. Thank you.